Hey, now, I want to take a look at just how quickly things can change. Over the last week, we have seen some numbers, some data, some research come in that shows the economy is getting incredibly weak. From November 24th to December 1st, listen to this. We have seen massive changes with respect to when and how many times the US will cut rates in 2024. So listen, November 24th, the bond market was pricing in 3 rate cuts in the US starting in June of 2024. Now, as of December 1st, the bond market is pricing in 5 rate cuts, with the first rate cut coming in the US April 2024. 7 days, market expectations for rate cuts increased from 3 to 5, 66% increase. Are rate cuts coming tomorrow? No. But when we see US data like this, we start to recognize that rate cuts in Canada may be coming sooner based on the economic data and market expectations, all right? Just over these last 7 days. The Federal Reserve in the US, the Bank of Canada, they do not make the same moves. We have seen that recently with the US raising interest rates over the last year, but Canada holding at certain times, okay? But if the US were to cut rates and the Bank of Canada didn't, the Canadian dollar would skyrocket. A Canadian dollar that skyrockets would be great for perhaps you and I to do some cross-border shopping, but it is bad overall for the Canadian economy. A dollar going up makes exports less attractive and allows leakage of money to the US. The higher the Canadian dollar goes against the US currency, the more people cross-border shop, the more money they spend outside of this country. All right, you understand that. So what is the solution in Canada? It's probably going to be rate cuts now, very much sooner than we anticipated. The solution will be to lower interest rates. When? Again, no clue. Same with every other economist or pundit. The timeline is unknown here. But the reason I mention all of this is to help you and I in our client conversations. People are scared shitless of buying now, of wanting to get a bargain now. They're worried about their upcoming mortgage renewals. Your client base is beyond scared that rates could jump. They're calling to say that they can't afford their house. Maybe they're worried that they might even need you to sell their house because they don't want to lose it. All right. If our clients can hang on perhaps 3 to 6 months, I believe there will be good news on the horizon for buyers and for mortgage renewers. Okay. So in just a week, we saw a massive move in time and rate in the future. So imagine what we could see in another month. Put the plan together, work with clients, manage expectations, but keep in mind that finance, like many things in life, change takes longer than you think, but happens faster than we might be able to imagine.